Welcome back to Wealthwise, the podcast where clarity meets strategy. I want you to think about something for a moment. What if I told you that the single biggest financial rule change in a decade just became law, and it's set to either save you thousands of dollars or cost you a fortune this coming year? The outcome depends entirely on whether or not you understand the new playbook. Most people see taxes as a punishment, something to fear and get over with. But a select few see the tax code for what it really is, a set of incentives, a map. Today, we are grabbing that map and decoding the new 2025 tax laws. And we have the perfect guide for this journey. Our guest is Max Wise. Max isn't just a CPA, he's a renowned tax strategist and financial educator who specializes in turning the tax code from a source of anxiety into a powerful tool for wealth creation. Over the next 30 minutes, you are going to learn 3 critical things. First, the hidden deductions for salaried employees that 90% of people completely miss. Second, the game-changing new rules that will create winners and losers among business owners and investors. And third, a completely legal loophole that our guest has used to save his clients tens of thousands of dollars, a strategy that is now more powerful than ever. Max, thank you so much for being here.
Sarah, it's a pleasure. Thanks for having me.
So let's just dive right in. This topic, taxes, it always feels so polarizing and, frankly, intentionally confusing. Every time new legislation is passed, there's a firestorm of conflicting information. Why is this topic so widely misunderstood, especially with these major new changes?
That's a fantastic question, Sarah, and you've really hit on the central problem. The core reason is that taxes have become a political football. They aren't just about revenue anymore. They're about ideology. So when a new bill like this passes, you immediately get 2 extreme narratives. One side paints it as a doomsday scenario that will bankrupt the country and only help the ultra-rich. The other side hails it as an economic miracle that will supercharge growth for everyone. The media amplifies this conflict because it gets clicks, and the average person is left caught in the middle, feeling confused and powerless. The truth, as it almost always is, lies in the strategic middle. And our job is to ignore the noise and focus on the strategy. The biggest misconception I have to fight every single day is this idea that tax strategy is only for the wealthy. That is fundamentally wrong, now more than ever. This new law, for example, contains provisions that will directly impact the take-home pay of millions of everyday Americans, from the server at your favorite restaurant who might now get tax-free tips, to the office worker earning overtime, to the family buying a new car. Let me give you a real-world example. I had a client last year, a brilliant freelance graphic designer. Let's call her Anna. She was making good money, well into 6 figures, but was terrified of tax season. She operated under the assumption that deductions were just for big corporations. We sat down, and I asked her about her vehicle. She used her SUV constantly to meet with clients, transport equipment, and attend industry events. Under the old rules, she could have deducted a portion of its use. But under one of the most powerful provisions that's just been reinforced in this new law, she could potentially write off 100% of the vehicle's cost in a single year. We're not talking about a few $100s in gas mileage, Sarah. We're talking about a potential $40,000 or $50,000 deduction that could have wiped out a huge chunk of her tax bill. She had no idea. She was leaving life-changing money on the table simply because she thought the game wasn't for her. That's why this conversation is so critical. This isn't about finding shady loopholes in a dark room. It's about understanding the incentives the government has literally written into law for you, for your business, for your family to use. And these incentives fall into a few key areas, which is exactly where we should dive in next, starting with the toolkit every single earner needs to have in hand.
All right, Max, you left us with that powerful story about Anna, the graphic designer, who was leaving tens of thousands of dollars on the table. It perfectly busts that myth that tax strategy is only for the super rich. So let's start right there with the everyday person, the salaried employee, the hourly worker, the person who gets a W-2 and thinks, this doesn't apply to me. What are the tangible, wallet-level changes from this new law that they absolutely need to know about right now?
That's the perfect place to begin, Sarah, because this is where the most people will feel an immediate impact. The mindset shift here is to stop seeing your paycheck as a fixed number and start seeing it as a dynamic one. There are three huge changes I want every single listener who earns a paycheck to burn into their memory. First, let's talk about tax-free income on tips. For decades, if you worked in the service industry as a server, a bartender, a hospitality worker, your tips were just as taxable as your regular wages. Under the new law, that's changing, albeit with some important caveats. From 2025 through 2028, a portion of your tip income could become completely tax-free, up to a maximum of $25,000. Now, it's not a free-for-all. This benefit begins to phase out for higher earners. So if your total income is over $150,000 as a single filer, you won't get the full benefit. But for the vast majority of people in these industries, this is a direct cash in-pocket increase. Think about a bartender in a busy city who might make $20,000 a year in tips. Before, they'd lose a significant chunk of that to federal taxes. Now, that money is theirs to keep. It's the difference between struggling to pay rent and having a safety net.
That's massive. It fundamentally changes the value of working in that industry. So that's tips. What's the second one?
The second is a cousin to the first, a new deduction for overtime pay. This one is more nuanced, but just as powerful for those it applies to. The key here is that it's not your entire overtime check that becomes tax-free. It's the premium, the extra amount you earn for working beyond 40 hours a week that you can now deduct against your total income. Let's make it concrete. Say you're an electrician and your standard rate is $30 an hour. Your overtime rate is time and a half, so $45 an hour. For every hour of overtime you work, it's that extra $15, the difference between 45 and 30, that becomes a tax-deductible amount. If you work 10 hours of overtime in a week, that's $150 you can deduct from your taxable income. Over a year, that can easily add up to thousands of dollars in tax savings. Critics are quick to point out that this only benefits a fraction of the workforce who are eligible for overtime, and they're right. But for that fraction, the nurses, the construction workers, the factory employees who are truly powering our economy, this is a long overdue acknowledgement of the value of their extra time.
And the third point you mentioned, this one sounds like it could apply to almost anyone.
This one is, in my opinion, the most surprising and potentially the most overlooked. It's the new deduction for interest on personal car loans. For as long as I can remember, the rule was simple. Unless you used your car for business, the interest on your loan was a personal expense, end of story. Not anymore. Starting this year, you can now deduct the interest you pay on a personal vehicle loan up to $10,000 a year on top of your standard deduction. The main condition is that the car has to be manufactured in the United States. Again, there are income phase-outs. The full benefit is available to individuals earning up to $100,000 a year or couples earning up to $200,000 a year. But think about what this means. The average car payment in America is over $700 a month, and a huge chunk of that is interest. We're talking about a potential tax deduction of several $1,000s that simply did not exist for the average family last year. It's an incentive hidden in plain sight.
Wow, those three things alone could change the financial picture for millions of households. It really drives home the point that you can't afford to be passive about this.
Exactly. The goal isn't tax evasion, it's tax efficiency. Don't leave money you've rightfully earned on the table with the government.
Okay, Max, that's a powerful toolkit for people earning a paycheck. But a core principle we talk about on WealthWise is moving from just earning to owning. It's about acquiring assets. So let's scale up. What about those who own property or have significant investments, particularly those living in high cost of living areas? What are the new levers for them to pull?
This is where the strategy moves from defense to offense, Sarah. For investors and homeowners, the game is about leverage, and the new tax law just handed them two very powerful levers. The first is a massive change to what's known as the SALT deduction. SALT stands for state and local taxes. This includes your state income tax and your local property taxes. Before 2018, you could deduct the full amount you paid in these taxes from your federal income. Then the Tax Cuts and Jobs Act came in and put a painful cap on it. You could only deduct a maximum of $10,000, regardless of whether you were single or married. For people in high-tax states like California, New York, or New Jersey, this was a financial gut punch. They were effectively being taxed twice on the same income. Well, the new law has quadrupled that cap. The SALT deduction limit is now $40,000. This is, without exaggeration, a game changer. For a family in that situation, it could mean an immediate federal tax saving of $10,000 or more year after year.
That's a huge relief for so many people, but you mentioned a second lever, something you called a loophole in the intro. I have a feeling this is where the pro-level strategy comes in.
You're right. This is the one that makes my eyes light up as a strategist. It's called the SALT cap workaround, or a pass-through entity tax. And it's one of the most elegant pieces of tax strategy available to small business owners today. Here's the problem it solves. What if your state and local taxes are more than the new $40,000 cap? Say you're a successful consultant in California and you pay $100,000 in state taxes. As an individual, you can only deduct $40,000 of that. You're losing the benefit on the other $60,000. But what if you don't pay the tax? What if your business pays it for you? This is the workaround. If you operate as a pass-through entity, like an S-Corp or an LLC, the business can elect to pay the state income tax on your behalf. Why does this matter? Because a business's expense deductions are not limited by the SALT cap. So your S-Corp pays the full $100,000 in state tax and deducts that entire amount as a business expense. Then the state gives you, the individual, a credit for the tax that your business paid. The end result, you've effectively managed to deduct the full $100,000, completely bypassing the $40,000 personal limitation. The best part? This isn't some shady gray area. The IRS has officially issued guidance and given it their blessing. It's a strategy that rewards sophisticated structuring.
My mind is blown. So you're essentially shifting where the tax is paid from your personal pocket, which has a limit, to your business pocket, which doesn't. That is brilliant.
Precisely. The tax code is a rule book, but for the informed, it's a map with built-in shortcuts. The SALT cap workaround isn't a loophole. It's a marked path for those who know where to look.
Max, that workaround is an incredibly powerful tool for business owners. It really feels like entrepreneurs and the self-employed are getting a lot of attention in this new bill. From your perspective, are they the biggest winners here? And if so, what is the absolute golden ticket for them?
Sarah, if we're talking about who has the most potential to radically transform their financial position with this law, it is unequivocally the entrepreneur. The government, through the tax code, is essentially offering a partnership to people who create jobs and invest in the economy. And their golden ticket can be summed up in two words: bonus depreciation. Depreciation, in simple terms, is how a business accounts for a large purchase. You buy a $50,000 piece of machinery, and you typically write off a portion of that cost over several years. It's a slow, steady deduction. Bonus depreciation throws that out the window. It's a steroid shot for your deductions. It allows you to deduct 100% of the cost of a qualifying asset in the very first year you put it into service. This provision was supposed to be phasing out, creating a lot of uncertainty. This new law just made it permanent. That certainty is everything. Let's bring back Anna, our graphic designer. She buys a new heavy SUV for her business for $60,000. Instead of deducting maybe $12,000 this year, she can deduct the entire $60,000. If her business made $100,000 in profit, her taxable income just dropped to $40,000. The amount of cash she saves on taxes is enormous. And what can she do with that cash? She can hire an assistant, buy better software, invest in marketing. She can fuel her growth. It applies to equipment, machinery, business vehicles over 6,000 pounds, even certain components of real estate.
So it's an accelerator. The government is essentially giving you an interest-free loan in the form of a massive, immediate tax savings to reinvest in your own growth.
That is the perfect way to frame it. It's an accelerator. And it works in tandem with the second major win for entrepreneurs, which is the permanent extension of the 20% qualified business income, QBI deduction. This is another one that sounds complex, but is beautifully simple in its effect. If you run a pass-through business, again, an LLC, S-Corp, or sole proprietorship, you can often just take a straight 20% deduction right off the top of your qualified business income. So, if your business has a taxable income of $200,000, this deduction could instantly slash it by $40,000 down to $160,000. Making both bonus depreciation and the QBI deduction permanent creates a strategic paradise for entrepreneurs. You can now plan 5-10 years into the future with confidence, knowing these powerful tools will be there. It allows you to think not just about next quarter's profits, but about building a long-term, tax-efficient machine. It's a fundamental shift from reactive tax filing to proactive wealth building.
It really reframes the entire relationship an entrepreneur should have with their finances and, by extension, the government. It's not adversarial, it's strategic.
100%. For entrepreneurs, bonus depreciation isn't just a tax break, it's government-sanctioned fuel for your growth engine. Use it.
Max, this has been an absolute masterclass in strategy. We've talked about the tools for the everyday earner, the edge for homeowners, and the super-deductions for entrepreneurs. It's clear that you live and breathe this stuff. But I want to go beyond the numbers for a moment, because strategy is often born from experience, and sometimes from painful ones. Was there a moment in your own financial journey, a specific failure or a breakthrough, that forever changed how you think about money and specifically about taxes?
Absolutely. It's a story I don't tell in every interview, but it's the fundamental reason I do what I do today. It was my first year as a full-time freelancer. Fresh out of a corporate job, I was in my early 20s, working as a marketing consultant. And Sarah, the money was intoxicating. For the first time in my life, I was seeing checks with commas in them that were mine, not a company's. Revenue was pouring in, and my ego was right there with it. I felt invincible. In my mind, I was this creative genius, this marketing whiz. I wasn't an accountant. The administrative side of the business felt boring, like a chore for later. So I did what so many new entrepreneurs do. I made a catastrophic mistake. I didn't separate my bank accounts. Business expenses and personal coffees all went on the same card. I had a literal shoebox, I'm not even kidding, a shoebox under my desk where I'd toss crumpled receipts, telling myself I'll figure it all out in April. I was flying high on income, completely blind to my liabilities.
I think every single person who has ever started a side hustle or a business is feeling a knot in their stomach right now, because that is such a relatable scenario. So what happened in April?
I remember it vividly. I finally sat down with my shoebox of receipts and my bank statements, plugged everything into some basic software, and held my breath. When the final number popped up on the screen, the amount I owed the IRS, I thought the software had broken. It couldn't be right. It was a number that looked more like a down payment on a house than a tax bill. It was more cash than I had in my bank account. I'll never forget that feeling. It was a wave of pure cold panic. The pride I'd felt all year instantly evaporated and was replaced by this suffocating dread. The freedom I thought I had built was a complete illusion. I was trapped by my own ignorance. I had spent months celebrating the money I made without giving a single strategic thought to the money I was allowed to keep. It was in that moment of absolute failure that I understood the most critical lesson of my financial life, a lesson that no textbook could have ever taught me. Earning money is just the start of the game. The real art, the true measure of financial success, is in keeping it. That single, terrifying piece of paper turned me from a high-earning freelancer into a true financial strategist. I vowed to never feel that powerless again. I dove into the tax code, not as a set of rules to be feared, but as a system to be understood and mastered. That failure was the price of my education. And frankly, it was the best money I ever spent.
Max, thank you for sharing that. That story is such a powerful and vulnerable illustration of how easy it is to get this wrong and how a painful lesson can become the foundation for expertise. It also highlights how complex this all is. Looking ahead and thinking about how to prevent people from having that shoebox moment in the future, if you had to bet on one major shift or technological trend that will define financial success in the next 3 to 5 years, what would it be?
I'd bet everything on the rise of the personalized tax AI. And let me be very clear. I'm not talking about the tax filing software you use in April. That's reactive. That's just a better, faster version of the Shoebox. I'm talking about a proactive, real-time, AI-driven co-pilot for your financial life that lives in your pocket. Think about it this way. The complexity of the tax code is becoming too much for the human brain to manage in real time. Even for professionals, it's a challenge. We make strategic decisions in May, in August, in November, but we only calculate the tax consequences once a year. That's an insane way to run a business or your personal finances. The future, as I see it, is a system that connects to your financial accounts, securely and with your permission, of course, and runs continuous simulations throughout the year. Imagine it's September. Your phone buzzes. It's not a notification from Instagram. It's your AI advisor. It says, "Sarah, based on your income trajectory from your podcast and your recent investment in new audio equipment, you are on track for a significant tax liability. However, if you make your final estimated quarterly tax payment by September 15th and structure the purchase of that equipment as a 100% bonus depreciation deduction, you can unlock an additional $4,500 in tax savings. Would you like me to show you how?"
That's not just an improvement, that's a complete paradigm shift. It's moving from tax preparation to tax optimization continuously.
Precisely. It will analyze your spending and flagged missed deductions. It will see a large capital gain from a stock sale and immediately suggest tax-loss harvesting opportunities to offset it. It will see you're about to cross an income threshold for a specific credit and advise you on how to contribute more to a retirement account to stay below it. This won't replace human advisors like me. It will augment them. It will handle the constant, data-intensive monitoring, freeing up human strategists to focus on the big picture, on life goals, on legacy, on the qualitative aspects that an AI can't grasp. The complexity of these new laws will be the very thing that forces this innovation into the mainstream. It will democratize high-level tax strategy, taking it out of the exclusive domain of the ultra-wealthy and putting it into the hands of anyone with a smartphone. That's the future I'm betting on.
Max, I feel like my financial IQ has gone up 50 points in the last 30 minutes. That vision of the future is incredibly exciting. Thank you, not just for the technical masterclass, but for sharing your own journey with such honesty. We've covered so much ground today, from tax-free tips for service workers to the game-changing SALT cap workaround for homeowners and business owners, and the immense power of bonus depreciation for entrepreneurs. The message is crystal clear. You cannot afford to be passive. And if you, our listener, found even one piece of actionable advice in this conversation that could save you or a friend money, please do 3 simple things for us. First, share this episode. Take a screenshot, post it to your story, or send the link to one person you know who's still using the Shoebox method. You could be saving them a fortune and a lot of anxiety. Second, hit that subscribe button on whatever platform you're using. We bring you these kinds of strategic breakthroughs every single week, and you don't want to miss what's next. And finally, leave us a review. It's the single best way to help us reach more people who need to hear this. Let us know what you learned. As you move forward from today's episode, I want you to hold on to the powerful lesson Max has taught us. Your tax return isn't just a form you have to file. It's the report card for your financial strategy. Thank you so much for tuning in to Wealth Wise. Until next time.